Mark and I have become good friends throughout our workings together, and he is going to share one of his properties with us today and tell us a bit about his story. So Mark, thank you very much for joining us tonight. Really appreciate you spending your time with us, and I know taking the time and building these presentations and going through everything takes some time. So I really appreciate it with your busy schedule.
Thank you for having me. I appreciate it. And you know, Nicole, we were practicing this whole social distance thing long before COVID happened, because we've only actually seen each other or been in the same room twice now.
That's right.
But
yeah,
we're great friends and built a strong connection and working relationship over that time. Yeah.
That's exactly right. So why don't you tell us a little bit about yourself and your journey, into Lifestyles Unlimited and real estate?
So I'm Arizona boy through and through, and I learned about real estate in a different way at the end of my college time, and that was long before I learned about lifestyles. Now, after I built a business, I had someone coming to me and saying, "Hey, you had lent us some money, and I'm going to send you that money back." This happened in 2017, in the fall of 2017, and at that time, I had been looking for, right around that time, because of that call that I got, I said, okay, how am I going to put this money to work? Because it was investment dollars. So I had to go somewhere. So the next day I was driving down the road and I heard Dell on the radio for the first time. And he was going to be in Phoenix that weekend. And I said, well, let's learn about this. That was my introduction to lifestyles. I love the experience that I've had. I mentioned to you that I'd built a business. So we bought a house before then we built a business. So we had these couple of streams of income. And I realized from way back when that's really the way the path that I wanted to have. Each and every one has our own path. I have my father-in-law is a equities man all the way, does not like real estate. I say, man, real estate has so many more advantages. It's got to be the way you go. So I have a goal of, well, maybe I should wait on that.
That's on the last slide. You're skipping way ahead.
Yeah, I am. Huh? Well, I believe that we should all have many streams of income, not just one. I believe it was Jim Rohn who said, work your job during the day and work on your wealth at night. Yeah, I 100% believe that.
So let's talk a little bit about your real estate investing. It says here that you've been real estate investing since 2002.
Yes. So just after I read the book at the end of college, I said, I need to buy a rental property. That is definitely something. And so I did. I bought a rental property in Phoenix area before the run-up. And then in the run-up, we bought 3 more. And it's been a wild ride.
The picture behind you, is that the wild ride?
Well, I like that, Nicole. That's good. So we did start buying, and we bought some single family rentals back in the day. We even had a 4-plex, which is still single family in most ways, except for how you negotiate the property management fees. I like to link that one, put that one into the, you can push the amount down, amount that the property management company will charge to be more like multifamily properties when you have 4 like that.
Economies of scale, right? That's basically
right.
what you're
absolutely.
saying.
Yeah. Yeah, a lot of times, maybe this is something that David's going to cover in the 2-day, but there is a difference between the management fees on a single family property versus a multifamily property.
Oh, absolutely, no question.
Yeah.
Let's keep moving forward. So let's go to the next slide. Okay, so this gets into the stuff everybody's really interested in. So tell us about the property, and it's not just one, it's 3. So that's very different. So talk about this purchase.
So what happened is we found this property, and the agent called me and said, hey, the seller has these 3 properties they want to sell. And I was like, oh, that sounds great. I should buy one of those, right? And then I started crunching numbers, and I was like, we should buy more than one of these. And then I said, we should buy 2. And then when it got down to the decision moment, I was like, no, we're buying all 3. Come on, let's do this.
So talk a little bit about the purchase.
Yeah, yes. Okay, so we purchased 106 units for 2.7 million. We brought 1.16 to the table. We had, you can see the initial financing at 7.25. Now, a lot of you might think, wow, that's super high. That's David's eyes.
David's
Whoa!
eyes.
I'm gonna stop you.
Don't worry, we're gonna get there.
Hold on, before we even get to that, you're just racing along. Okay.
I know, David, I know exactly what you're gonna say. $25,472 per door. If you are in most areas of the country, you're about having a heart attack right now, right? Is that what you were gonna say, David?
Absolutely not. I don't care about that. That's meaningless to the people watching tonight for the first time. They just saw 1.1 million and they all walked away from their computers. Most people out there don't have $1.1 million. Mark, did you bring all that money to the table by yourself?
No, sir, I did not. I have 20 partners on this project.
Okay.
And we have people from Chicago, Washington, Texas,
So people from
Arizona,
all over the place,
All
right?
over.
all over. Yeah.
And what's their investment look like? What is the amount of the lowest investor amount?
The lowest investor is an investor to put in $10,000. He
10,000.
emailed me and emailed me and said, hey, would you take somebody that has $10,000 to put in? And I said, yeah, that'd be fine. Yeah.
Here's why folks out here listen, why this is so important to me as a teacher. I teach all my guys, I don't care how big you get. Remember when the little guy comes in here and doesn't have a lot of money to work with, take a couple little guys. Thank you so much, Mark, for helping the little guy. I really appreciate that.
I'm not sure that particular guy is little at all. I think that's all.
He doesn't have millions of dollars to work with, because some people go, well, this guy's $1 million. But what about the guy that's the truck driver?
Yeah.
That $30,000 to him is the world. So it's just important. And I'm saying, let the guy in like that. And I'm glad you did that.
Yeah. It makes a lot of sense to me to do that as well. So yeah. So we did buy for $25,000 a door, and here in Phoenix, that's unheard of. Not able to do that in this particular market. Topeka 3. We're in Topeka, Kansas, and that is the going rate. The Midwest has a different. It's a different cash machine, and that's really why I love it there. But
so talk about your capital repairs a little bit, and that $800,000. What was that going to go toward? Yeah,
so we contracted with the general contractor there in Topeka, and we did a full remodel. All of the kitchens were totally remodeled, pulled all the way out, new cabinets, everything brand new, put back in. Bathrooms the same, flooring, all brand new flooring. All of the finishes on the walls and on the floor, brand new. We did that for $7,500 an apartment per each unit. So
fantastic.
Yeah, so this was the income out of the gate. All of the units were full at the time that we took over in October of last year, and we we transitioned each of the units as we could access those through the year.
So as the leases came up,
Right.
you were able to get in
That's
there and turn the unit and rehab them. Yeah. So you didn't kick everybody out. You did it over time. Yeah.
Right.
And that's normal. So your net operating income, or what we would call NOI, is basically your monthly cash flow annualized.
Right. This is the number that we had right out of the gate in the beginning, and you'll see in a little bit, a few more slides, where we're at basically today. So
right. So we can look at some pictures next.
So everything's brand new. We didn't just paint the cabinets. We pulled the cabinets out and put new cabinets in. Everything is brand new. The flooring, the all of the appliances, and we were able to do that for 7,500 per, a little more than that, 7,543 per unit. So
That's an excellent price.
yeah, the contractor has been fantastic in every way. Yeah.
All right, next slide. All right,
Okay,
so we're going to take a few minutes on this slide, and Mark, I'm going to interrupt you a couple of times because there's a few important points I want to point out to the folks that are joining this call.
So one thing that was interesting that we didn't quite expect is well, you see that the income at purchase and at year one, and then on the expenses line, the expenses dropped significantly, and I didn't expect quite that significant of a drop. And I attribute that to a couple of things. One, we had contractors on site taking care of maintenance items. One, and also at the end, after the renovations took place, there were a lot less maintenance or repair needs.
Why? Because you fixed everything. You replaced everything, right? So that is one of the key things that we teach is you get into a property and you fix everything. You bring all the money in that you need to get everything in great condition. And this is the result of that. Your maintenance and repairs and, you're running the expenses of the property go down oftentimes because you're not constantly having to fix everything because everything's new. It doesn't break, right?
Yeah, that's so much. I mean, think about it, guys out there watching for the first time. People always go like, well, why is he throwing out some of those appliances work? Think of as a maintenance man how happy he is when everything's new. There's a warranty now. So instead of your maintenance guy doing it, he calls the manufacturer and they fix it. So I just want to make sure people understand what we mean by that, what Nicole's saying, because it's a very valuable.
Yeah, and
you're going to learn that in great detail at the 2-day. David's going to really hit that home and show you with numbers and with lots of data why that makes sense. So
yeah, our philosophy is best product, best price, right? So that is something that we continually say, and it's a motto that we try to live by. And what that means is we take care of our properties. We are not slumlords. We don't bleed the properties dry of, we take care of issues. We fix stuff when it needs it. And so what we generally would see, on an ongoing basis is your expenses will go up every year. But in that initial purchase year one takeover, when you are investing a lot of money into the property, they often go down because you're putting a lot of capital into the property and you're fixing everything. So you'll get an initial downward and then it'll start to go up a little bit as everything that you fixed gets a little older over time.
And really quick for the new folks watching for the first time, I know some of this might sound Greek to you. I will break this down so simple this weekend. So don't get caught up in all these numbers. It sounds like gobbledygook, like NOI and debt service and cap rates that might come out. In the end, focus on the bottom line, which is that bottom number. That's what makes sense. Think of it as if you invest in a bond. You're like, oh my gosh, the first year is only making a 1% return. But what they're basically saying is we bought something ugly. It's not going to make a good return when it's ugly, but once we make it beautiful, boom, year 2, 12% return, tax-free. Then there's a technical term in the industry for that, being your pants exciting. So I just want you to understand that bottom number is really what matters to you if you're a new person. And it doesn't matter whether you're the guy with 10K or a guy that put in 100K, you make a 12% return on whatever amount of money you put in.
Right. Yep. So don't be discouraged by that negative 3% because that's at the time of purchase. That's not Mark's
running a
run
raw.
rate.
So this there's one thing here that is a little bit off, and that is the at purchase versus year one. That's the end of year one. So that's an average. It's actually a 4% return. You know, when you see what happened over the year.
Annualize it. Right.
Yeah.
Yeah.
Right.
All right, David, let's go to the next one.
Okay, so yeah, this one is pee in your pants exciting. Yes, I agree. So again, purchase NOI versus end of year one, you see a drastic difference, not only in the income, that's an overall income at the end of year one. We're taking the last month of the year and we're annualizing that versus at the end of year one numbers, right? And that's where you see this massive estimated capture or equity capture right there. That's where you have this drastic swing that's happening in that month. Now it's an annualized month, and you're seeing at the end of year two that's the whole year put together. But just like we've seen, so these numbers were really exciting to me. And then I watched a single family, and I was like, hey, they did it too. Wow. Okay. That's interesting. That's interesting.
Mark,
Yeah, you can get it everywhere.
Numbers are so freaking awesome compared to single family.
Yeah.
All those guys that put their 10 grand, 50 grand, 100 grand, they've been sitting on their butts at home and going seeing pictures of all the crap you've been doing, going, oh, that looks like a lot of work. Oh, where's my wine? Okay, thank you. Where's my check? That's why it's being advanced exciting. Totally hands off, and they're going to make 134% return because all the hard work you're doing, Mark. So I want people out there watching is Mark's there every day doing all this work, or well, not every day, but you get to my point. But what is your investors? Explain the life, Mark, of your investors. How much involvement, and of your 20-some investors, however many was, how many actually came out to the property? I just want to know so folks out there understand that not everybody even comes. I know I'm throwing this at you, but let's be real.
I do. Actually, this might shock you, but I have had 2 of my investors call me and say, hey, we want to come and see the property. And I was like, you do?
That's awesome.
Why? And then they said, well, we're going to a Chiefs game in Kansas City, and we need to write it on the property, or we need to write the trip off. So if we just stop by the property, then we write the whole thing up. And both the investors.
Nice.
Yeah.
So you had 2 of them, but my point is this for the folks out there watching. If you invest in a deal like this, he might have people from California or New Mexico, I don't know where they are, but they're all across America. You don't have to be there to do this, is my point. So.
Right, absolutely.
Right, but you are also given a lot of information. There's monthly communication and financial statements that come to you every month. So you do get progress updates on a monthly basis on how the property is performing from the person who's the operating partner.
David's going to go into this, but I have to say, I love the fact that Dell built this Lifestyles Unlimited to be passive protective. And I think that it's the only way that it really works long term. And it's the way that everyone wins together. So you're going to learn tons more about that. And David's going to teach you. And I would tell everyone, absolutely make this space in your life to go to that 2-day, because it's going to change your life. Yeah.
Yeah. And Mark's been to my 2-day, right?
Actually, I went to
Brian's, right?
Yeah. Yep.
Yeah, Brian's another teacher, and actually Cole's husband teaches a seminar as well. There's a bunch of us. I know I met you before somewhere, Mark. I didn't know if it was the expo or where it was, but
it was in Phoenix.
Yeah, it was in Phoenix at the grand opening.
Okay, that's right. I remember where we talked. I wasn't sure if it was my seminar or if it was the grand opening, because I did the grand opening. But I know Brian teaches as well, and I wasn't sure whether his class or my class. You know, so awesome. Yeah, and remember, folks, I'm not the only teacher. There's more than one of us out there that change lives and retire people and ruin people's careers. You know, it's kind of cool. Awesome. Let's go to the next slide. Okay.
Okay, so I absolutely just followed the lifestyles map. I didn't break the mold on that. I knew from the beginning that I wanted to be in multifamily, not back in I say back in single family, because that's what I was doing before building the business. And then I moved, when I came back to the real estate world, my true love, came back to my high school sweetheart, so to speak. uh, I decided to go with the lifestyles model and do the multifamily thing. So right out of the gate, didn't make any moves until I talked to the mentors. I talked to JB a few times before making any moves. I talked to Nicole before, right as we got going in earnest on our purchase. Nicole and I were on the phone at least a few times a week. It was a lot. Poor lady.
Oh, it's been awesome. But I think the key thing on this slide is that you took action, right? You have to do something. You have to take action, whatever that means for you and the path you're going to follow. If it's as a passive investor, you need to get educated and, you know, get on people's lists so that you can actually get some deal flow and see if you're going to be, if you want to be an owner, you need to get educated, build your team, you know, whatever your goals are, you need to work with the mentors. If it's single family, work with in the single family space and achieve those goals, but you have to take action, do something.
You know, it would not have happened had I not taken action. Just to say this, the real estate agent that found the properties for me didn't have those properties when I first reached out to him. I said, hey, I'm headed to Kansas. I want to meet with you. I want to sit down. I want to see exactly what you can show me. So find me some properties. And he's like, wait, you're coming here? Like, whoa, you know. And I said, no, he's like, you're serious? You're actually going to do this, aren't you? And I said, hey, I'm not getting on a plane for the heck of it. I'm here to do something. So.
And who allows you to do that? I mean, I see the picture here, and you've got these beautiful 3 little boys, and your amazing wife is, you know,
my amazing wife Tiffany is the glue that keeps it all together, for sure.
And she's amazing.
Yeah, I have a 12, a 9, and a 3-year-old, a 4-year-old, and actually next week he'll be 5. But yeah, you can see that picture. That's our front door, her Tiffany blue.
Awesome.
Front door.
Nice.
Let's talk about your goals real quick.
So, you know, the big ones are this. We have completed the rehab. That's why it's marked out there. We've completed the rehab. We're closing the loss to lease. We have just a few more units to fill, and then we're going to market and sell the property. We actually have an offer accepted for 2 of the 3 properties right now. So super excited about that. We should close sometime in December on those
Excellent.
ones. Yeah.
But in the middle of COVID, Mark, how can that happen?
You know, it's absolutely amazing how COVID has been overblown, in my opinion.
And that's what I say. You know, everybody always doom and glooms in my seminar this weekend, and I'm so glad you're all watching tonight. Here's real people doing it. In today's market during COVID, not scared, making boatloads of money, you can as well. I just want people out there listening, you see this and hear this, not from me saying it, not from Nicole. We both work in lifestyles, from a member. Awesome.
Yeah, could not agree with you more, David. There, it's still, there's always opportunity, especially in this space, and it's just a matter of having the guts to go and do it. Quite frankly,
yep.
Yeah.
You want to buy 7 more properties in 3 years? That's pretty awesome.
Heck yeah,
You're gonna do that.
Mark is nothing if not enthusiastic.
Oh, he's like me. Ready to go. I understand that. I love that. I love people with passion. You know. All right, let's talk about your team.
That pales in comparison to you, David. You've bought much more than 7 in the last 3 years.
That's true, David. He's got to there.
That's what you guys do.
It's 7D, I think, is where you're at the last 3 years. Okay, so Brian Sifford is the one that really patiently taught me that the multifamily was the way to go. Huge thanks to Brian.
Great guy.
Peter Neerman is one of the ambassadors here in Phoenix area, and has amazing at building the community to it what it is today. Mark Petz said in the very beginning, he gave me a big shove and said, "Dude, come on, you gotta get going here. Like stop sitting around, stop waiting. You gotta go." And a huge thing.
Here. Yeah.
Yeah. And Nicole has, like I said, two, three times on the phone a week. The mentoring the mentoring promise that David will talk about at the 2-day is real and available, and you reach out and you use it, and you can have an crazy success building whatever dream you want to build.
Awesome. And of
then
course,
of course you couldn't do it without your partners.
Yep.
Absolutely. The 20 partners, wouldn't have happened without them, and so we're going to be able to send them back a good return on their money and in great gratitude. Yeah.
Yeah, they're pretty happy pretty much tonight when they see this, so it's pretty awesome.
Yeah.
All right, you guys ready for some questions? I'm gonna bring
Yeah.
Ember back on here. Ember, what questions we got tonight? Sure, we get a lot of them.
All right, we've got a few. So Hector was asking, can you hear me okay?
Yeah, we can hear you, Amber.
Okay, cool. Hector was asking if you'd done passive investments before, and if so, what was that transition like from being a passive investor to a lead investor? And if there's a certain point in time where you feel like the weight's off your shoulders.
No, it never gets off your shoulders. When you have 20 partners that have given something so hard earned to you to say, hey, invest this and keep it safe and make it grow.
Yeah.
That is something that you deal with as a lead and happily accept as a lead investor for sure. And that never goes away. I did not invest as a passive investor first. In a early conversation with Brian, he said, hey, you make your goals and you run. You go forward with your goals. Yeah.
Perfect. Cool. And Kijan had a question actually about your single family experience. She was wondering like how you managed 7 properties in 3 years, and if you're planning to get them all in the same city so that it's easier to manage.
So we've started a property management company in Kansas, and
Nice.
so the 2 markets are well, okay, I'm from Phoenix. I'm an absolute native of Arizona. Family's been here for a long time, and we plan on buying here.
Nice.
The appreciation play in Arizona is fantastic. The cash flow play in Kansas is fantastic. They're different, and both have their own benefits, and so we'll do both because they're different and they're both great.
That's fantastic. Thank you. And then the last question I have for you, kind of a 2-part, but what's the percentage increase for your renters? And then are rents being increased in the second year to help increase your NOI? So thank you very much.
They're not being increased in the second year. It's that annualization of the dollars that you're seeing from year to year. So the increase that some of the renters chose to stay and some of the renters chose to find residents chose to find another place. Those residents that did stay saw an increase of some of them, depending on the type of unit. The max was like about $100. Significant to some, but those residents that chose to stay there or chose to be in that type of unit. So.
Now, if you turned a unit, like the resident moved out and you put in a new resident, was that the same increase or is it different? Was it different?
No, yeah, same increase, same price. Yep. Yeah,
so
we went to
$100.
market rate. Right, we went an additional $100. So we went to the market rate. We stayed with the market rate, and we felt like that was an important thing to do. On the there's lots of laws that you'll learn about at the 2 days, fair housing laws that you have to work through and make sure that you're following. So there's been a few times where I've called Terry Gobler. You'll learn about Terry Gobler later. You'll know that name, but yeah, the mentoring side on the operations has been fantastic as well, quite frankly. Yeah.
Great. Well, Mark, thank you very much for joining us this evening. Really appreciate everything that you've shared with the group, and look forward to having you back at some point to talk about your future purchases.
Right on. Thank you very much. Have a good night.